So my name is Darrell Martin. I'm with the Apex Investing Institute. I'm a Nadex educator, meaning that Nadex has approved me to educate for Nadex. Cam does education for Nadex as well. He writes on their blog. Um, I write over on Nadex's blog, and basically we're actual real traders that they said, hey, people like what you do. We like what you do. We'd like you to hop on and share what you do with other traders. And so we both are writing on their blog. I do webinars every Monday on the Nadex Exchange. Me or John Skelton are on there. And so Nadex actually hosts the webinar and we hop on and present. Our motto at apexinvesting.com is traders helping traders. We have over 15,000 members. We grow by somewhere between 400 to 1,000 new members every single week. We have a lot of free stuff. So we have a free trading forum at forum.apexinvesting.com. If you log in as a free member at apexinvesting.com, you have access to that. We have binary and spread scanners made just for Nadex. They're live, they're very powerful, and they're easy to use. So if you want to trade on Nadex at all, you are going to want to use these scanners. And today we don't have enough time to go into those in detail. So we can do another webinar maybe, Cam, on just the scanners that helps you because, like I said, they're completely free. They're much faster and much easier than the Nadex platform. I spent a lot of money making it to help other traders out, to help out in my own trading. We have hundreds of hours of free education. We have step-by-step trading courses, all free. We have deviation levels based on implied volatility. They plot on 22,000 markets, stocks, ETFs, futures, and Forex. So if you trade any of those, then our deviation levels will work for you. And we also have trading rooms, and we have specific trading systems for binaries, spreads, futures, Forex, like I said, stocks, ETFs, CFDs, forwards, pretty much whatever you trade. We have systems designed for that. I spent a lot of time over, I don't know how many years now, well over a decade, studying various markets and some of the best ways to trade them, working with some of the best and brightest in the industry to help me learn. And I share that with you. Today's topic, we're going to talk about a very easy and simple way to trade a chart, okay, using Nadex spreads. And I'll tell you what spreads to choose as well. It's, really simple. All red means sell, all green means buy. And we use what's called IZONES, or institutional zone levels, where we do buys and sells. Okay, this is one of those things I've been working on. It didn't just happen overnight. It's something I've been working on and working on and working on to eliminate as much of that style and guesswork as possible. I'm going to show you how I trade the system using Nadex spreads. And, I've done a lot of trades. I do them publicly. I do them on air. I call them out. Here's one trade on the NASDAQ. And, this is in a matter of probably 45 minutes to an hour, over $1,000 on one contract there, over $670 on another contract, okay? And these are not rare cherry-pick trades. These are trades, like I said, I've done live on radio shows, on webinars. I'm not showing you all the stuff I do in addition to that, but this is stuff I've done publicly, so that way you're not like, oh, well, he just picked that one, And so, that's $1,600, and that's just a couple trades in a very short period of time. And we have a ton of those posted in our forum under "You Can Do This" and "Why You Should," and it has just tons of traders posting. John, you can put the link to that in the forum, the "You Can Do This" section, but it just shows trader after trader after trader, not just me, but a lot of different traders having success. And one of our themes at Apex is don't just follow the guru, okay, but become the guru. Meaning know what you're doing and why you're doing it, not just blindly following some signal person until it falls over and, kills your account, but know what you're doing and why you're doing it. So binaries, if you were on the webinar earlier, they're great contracts. I do trade them, but they're, there's some challenges with them. They're true or false statements as of expiration. Now you can enter and exit before expiration, and I highly recommend that you do that. Okay? Because here's the challenge on binaries: a tenth of a tick, literally a tenth of a tick, is the difference between a win or a loss. Meaning if it expires a tenth of a tick or a tenth of a pip out of the money, trade loses. I had a trade yesterday that lost on a binary, and it literally expired like that tenth of a pip. Not a rare thing. Now I've also had them win by a tenth of a pip. So, it's much more stressful. You can risk $80 and lose it all on the 10th of tick. You can risk 800, 8,000. Okay. Um, but it's very, like, very little can determine the win or the loss. And that's dangerous. It also can be exciting and a bit addicting. I prefer to trade binaries versus spreads. Spreads versus binaries when I'm doing large size. But binaries are a statistical trading vehicle, so you really need to be familiar with your stats, your expected ranges. One thing that Cam is really good about doing is he'll study a system. He'll look at it over a month, 2 months, 3 months, and he'll see that not only does that work, but it works very, very, very consistently on a lot of the systems that he puts out and the books that he makes. And he's been awesome with trading about inviting me to put in some of my strategies as well in there. I got in we got sharpshooter in there for binaries. We have ultimate hedge for spreads, and there's a variety of them. But if you want a really simple way, an easy way to trade charts for things like futures, maybe you're already a futures trader, a forex trader, a CFD trader, stock trader, or spreads. If you're getting started on Nadex, I am gonna push you over and over again to spreads. Um, Now, when you're looking at the spreads, they are different. So you can't think like a binary trader. It's not an all or nothing. It's based on one tick. One tick, the minimum increment. A tick, by the way, is like a cent. Okay? It's the minimum increment something moves in. Like a dollar, if you're thinking about dollars, you count in pennies, right? Well, a penny is a tick for a dollar. And all that means is the last digit that the thing quotes in, and it moves up by one or quarters or tenths or whatever it does. And one of the great things about spreads is they make it really easy. You don't have to get all complex like you do with a lot of futures. But the number one thing I want you to remember from this slide is they are not all or nothing like a binary. Okay. Now, I will tell you, binaries are the buzz. They're very exciting. They're really easy to understand, but they are harder to trade without statistical backing of a system for a long period of time. And people come in and they're ones and zeros. They love or hate them before it's all over. Okay. And I'd say a smaller percentage love than hate. Okay. And so just to help set you up for success in the long term, I'm going to also give you the reality. Spreads are a little harder to understand, but they're a lot easier to trade. Once you get the basics, once you understand them, and you understand the risk and reward and the payoff, you will love them. Most beginners and even intermediates would be a lot better off if they traded spreads than binaries. I traded for a decade before I touched Nadex, and I traded the spreads for the first 9 months before I even touched the binaries. Okay? You have a smaller account, much better off with the spreads. People think, oh, no, trust me, much better off with the spreads. Okay? It's not always easy to risk $5 on a binary to make $15 to make $15. Yes, there's plenty of $15 contracts, but the probability can be very low on this. Literally a 15% probability of expiring in the money. The binary costs 15. But on a spread, it is very easy to risk $15 to potentially make $15 because every tick is $1. It's not all or nothing. So if it moves 15 ticks against me, I get out. If it moves 15 ticks in my favor, I take profit and get out. It's really that simple. US tech has really low bid-ask spreads. Gold has really low bid-ask spreads. S&P has really low bid-ask spreads. There's a lot of contracts on Nadex that have low bid-ask spreads. And it's amazing because I see people go in and they'll put up like $50, $70, $80 to make $20 or $10 or $15 on binaries. I see this a lot. Okay. It's not hard to get 10 or 15 or 20 ticks on movement. It may be hard to get like 80 or 100, but it's not hard to get 10, 15, 20 ticks on movement at all, day or night, without a lot of movement at all happening in the market. On Nadex, the US tech, the NASDAQ spreads tick in 0.1. So if the NASDAQ moves 1 point, that's $10. If it moves 2 points, that's $20. It's not hard to get a 2-point move on NASDAQ at night. You can trade gold, oil, US, the NASDAQ, the S&P, the Russell. You could trade, soybeans and corn, and you can't trade those at night, but those are only during the day. But you could trade like US indices and US commodities like silver and gold and copper during the evening. in the afternoon, morning, around the clock really. There's plenty of times that you can trade them. So, whatever your schedule is, it really does allow you to be able to trade, uh, on Nadex. And you can make some, decent profit with or without a lot of movement. When I say 15 bucks, by the way, don't let that limit you. Okay, you saw where I was doing 10 contracts, I made 1,000. Okay, um, and I have tons of examples. That's just one of many. But I mean, you can do 10 contracts and make 150. You can do 100 contracts and make 1,500 on just 15 ticks of movement there. So you don't need a lot of movement. One of the great things about the Nadex exchange, I know it's already went over, is you can't lose more than you put up. So if your risk is 15 or 20 or 50 or whatever, that's the worst case scenario. And let me emphasize worst case scenario here, because on binaries, it's all or nothing. So if you lose and you put up 80 bucks and you lost all 80, okay, at expiration. On spreads, if you get in and there's an $80 risk and the market moves 10 ticks against you, you lose $10. Okay? So even though you could lose 80 if it moved 80 ticks against you, you don't have that all or nothing thing happening. So your max risk does not necessarily mean your realistic risk, because you can easily exit. You still get insane leverage. Somebody's trying to argue with me about how they use some overseas non-regulated FX broker to get 1,000-to-1 leverage and how that's better than Nadex. And I said, really? Because right now I could pull up a euro-dollar spread for a $6 risk, which would equal a mini lot. And that'd give me 1,666.67% margin. I mean, leverage. Literally 1,667% leverage, but my maximum risk is $6, no matter what happens. How do you beat that? I mean, that's on a spread. So I'm like, yeah, don't go with these places where you can get margin called and you have leverage that can cut both ways. This defines that leverage so it doesn't cut both ways. Like I said, indices, commodities, and FX pairs. So let's talk about how they work. How do these spreads work? Okay, if you're familiar with verticals, it's pretty similar. If you're not, you'll understand it here in a matter of a couple minutes. Okay, you're going to have a floor and you're going to have a ceiling. They're going to define this. It's always the same width for the expiration. So they'll have expirations around the clock. We'll talk about that, but they define the floor and ceiling. You don't have to get it all into that. It's automatically defined for you. Okay. And so let's say we're looking at the euro dollar. Then the floor, 2,400. This is just an example here. And the ceiling, 1,2500. Okay, let's say that was the floor and ceiling the spread. Let's say this actually was where the euro dollar was currently trading. All right. And the spread, the word spread, which seems intimidating, really isn't. It's right in the middle. Okay. So spread is the difference between the floor and the ceiling. And so what is that difference? It's 0.0100 or 100 pips. It moves in the last digit. Remember I said it moves in the last digit? That's the tick. We talked about that earlier. Okay, so the last digit is that 0 right there, right? So therefore, every tick or pip, is worth $1. Pip is what it's used on Forex because you have two different currency pairs. Tick is what's usually used on futures. But it's the same thing. It just means minimum increment. Okay? So if every single tick or pip or whatever is worth $1 and there's 100 pips, what is this spread worth? Simple question. Who can tell me what is this spread worth? If every tick's worth $1, okay, and there's 100 pips, then the spread's value, the difference between the floor and ceiling, the maximum value, okay, of the spread is $100. Exactly. So Matt, you got it. John, you got it. Exactly. Okay. So the spread's value is 100 pips. Every pip's $1. Therefore, the spread's worth $100. Okay. Again, the spread is simply the difference between the floor and the ceiling. Just keep watching. This will start coming together for you. Okay. So let's say if we were going short the spread, we thought the euro dollar was going down. We can't lose any additional money above the ceiling, and we can't get stopped out. So it could fly against us by 100 pips, and if our risk was $10 or whatever, the most we could lose is $10. Now on the flip side, let's say you sold up here and it flew down. You can't make any additional money below the floor. Now don't get the idea it has to expire in between, because it doesn't. Okay, that would just mean you're at maximum profit. All right. So, but how many of you have the problem of getting 100 pip moves on FX on a intraday basis? Too many of you hitting that issue? Grabbing 100 pips on every trade? I mean, if you are, we need to talk, right? Yeah, you're going in, you're grabbing 15, 20, maybe 50 pips on a trade, right? So that's what, if you're an FX trader, that's probably what a lot of you do. So, so let's look at, how does that math work out? It's pretty simple. Let's say I sell at 24.90, okay, to your dollar or whatever instrument it is, doesn't really matter because they all work the same, which is cool. If I sold at 24.90 and the ceiling's 2,500 and I can't lose any additional money above the ceiling, the difference of that's 10 pips. What is my risk on the trade? If every pip or tick is worth $1, what's my risk? Yeah, 10 bucks. Y'all get that? How simple that is? If I sold at 24.90 and the ceiling's 2,500, the difference is my risk. And you know what that means? That means I put up $10 to trade a mini lot on FX. You go do that somewhere else, you're gonna put up a couple $100. You trade that on, say FXCM or whatever. $10 is my margin. $10 is my max risk, and it can move 100 pips against me. I'm still only down $10, and it can still come back, and I can still be profitable. Now, I can't make any additional money below the floor, so who can tell me how much money I can make if it flew all the way down? And I did catch one of those 100 pip moves. How much could I make if I sold at 24.90 and I stopped making money at 2,400? Which again is a pretty rare problem to have, right? Yes, that's right. So we got $10 risk on one side, we got $90 of profit potential on the other. Does that sound like a trade, an instrument you'd be interested in trading? Even if you trade size, you do 10 contracts for $100, you're controlling a full lot of euro dollar for $100. Okay. Now, doesn't mean you're going to make 90. It'd have to move 90 pips. Okay. So I don't want you to get that idea. It's not an all or nothing. It'd have to move. But if it moved 10, you'd make 10 on a risk of 10. Okay. But 1-to-1, if it moved 20, you'd make $20 on a risk of 10. And it works the same way if we buy. So if I bought at 24.10 and the ceiling's 2,400, or sorry, the floor is 2,400. So if I bought at 24.10 and the floor is 2,400, what is the difference there? 24.10 minus 2,400 is, I know these are really simple questions, but they help you follow along. So thank you, John. Yeah, they're 10. So if my risk is $1 a tick or pip here, my risk is $10. That's the worst case scenario. That's also the amount of money I have to put up to place the trade. Okay? And I mean, you may put up $40. You may put up $50. You may put up $40 and get out when it moves up 20 pips or get out when it moves down 20 pips. Okay? So you can not have a stop loss at all, or you could get out if it moves X ticks against you. So you don't have to risk the full amount. All right, so 90 pips of profit potential. Because again, if I bought at 24.10 over here and the ceiling is 2,500, the difference between 2,500 and 24.10 is 90. Every pip is $1, so my maximum profit potential is 90 bucks on the trades. All right, so one question that Jonathan put up is, I've tried trading spreads, but there's usually a spread between the price you buy for it and the actual strike. Well, the strike is the floor and the ceiling. It's not a binary that has a strike. The binary has a strike. The spread doesn't have, it has a floor and ceiling strike. So if you mean, is there a spread between the market price and the bidder offer of the spread you're trading, there can be a difference, and that's why we have the spread scanner. And I usually trade what I call NTM, or near the market spreads. Maybe, John, you can upload a screencast showing NTM spreads. I usually use NTM spreads, near the market spreads, so that way I don't have to worry about that difference whenever I want to mirror the market. Okay? You do not have to find a raging market. No, not at all. You can. I show you how to trade those. But you can get in the trade and you can get out wherever you want to. I could go short here and buy back here. I could go, long here, could go against me, buy some more and flies up, and I can take profit. I can go short. I can buy back. I can buy here. I can close it whenever I want to. I trade directionally. So do not get the idea. This is not a range-bound instrument in and of itself. Can you use it that way? If I buy positive premium, okay, which is a lot more advanced than what we're talking about, then yes, you could use them for range-bound markets. But what I'm talking about today is just simple directional trading. Okay? So it's just buying. If you think it's going to go up, you buy. If you think it's going to go down, you sell. But the really important thing is that you choose near the market, NTM spreads. Okay? So let's see here. Upload that screenshot from the forum on IZONE. Sharp. sharpshooter that shows NTM spreads. Filters. Okay. But yeah, near the market spreads. That is the big key. Okay, and daily makes it even better. All right, we're gonna do a webinar tomorrow afternoon. So John, you can post a link to that as well. And I'm going to talk exactly in more detail about how I trade spreads on IZONE Sharpshooter. That's going to be the whole topic. Okay. And talking about the near the market spreads and everything. So now, what about if you buy it and it expires? Is there any kind of delivery? Are you going to be assigned $0, or are you going to have to take delivery on gold or oil? Or, no, there's no delivery to worry about. It just cash settles. So if you bought it at 24.10, it expires at 24, let's say 80. You're going to make the difference. What is the difference between 24.10 and 24.80? Expired at 24.70. So you get a $70 difference. If you expired at 24.05 and you bought it at 24.10, what would happen? You would make or lose how much? You bought at 24.10 and expired at 24.05. You'd lose $5. Okay, really simple. Now, what if you bought at 24.10 and expired at 2300? If it flew against you, how much could you lose? You bought at 24.10 and expired at 2300. How much could you lose on the trade? Everybody's like, I think I know, but I don't want to tell because I might be wrong. Linda, you got it. Perfect. 10. Yeah, because your risk is capped. Okay? So it could fly against you and you're still only down $10, but if it comes back up by expiration, you could still be profitable. Okay, it's a very relaxing way to trade. I enjoy trading. I'm not stressed out when I trade spreads. And let's see here. Okay, so expirations. They got 2-hour contracts. I mean, you can get in 30 minutes for expiration. I usually like an hour or more. Daily is my favorite contract to trade because then I'm not even thinking about expirations. I just trade the chart. So my favorite method is near the market daily spreads. Okay, again, near the market daily spreads. And let's see here. That's what we're going to talk a lot about tomorrow. But larger time frames have wider floors and ceilings, so that means you can make more money. Okay, narrower time frames, so there's only 2 hours till expiration, will maybe only be 100 pips wide versus say 300 pips wide. So I can make more money on the trade by using a daily spread than a short-term spread. But if I'm only going to be in the trade for the next 30 minutes, I don't expect it to go 300 pips, so it doesn't matter. Okay. They define the expirations. Those expirations literally at 8 p.m., 9 p.m., 10 p.m., 11 p.m., 12, 1, 2, all the way till 3 o'clock the next day on Forex. They have ones that are till 4:15, like on the futures, till 1:30 on gold, till 2:30 on oil. So we actually have all these details in our spread scanner that show you all the contract specs. Okay. But if you want to keep it easy, just choose near the market daily spreads. Okay. Daily candles, usually it depends upon how you have your platform set up. So I usually don't trade daily candles. Tom, great question. Do you need to deposit 25 grand into your brokerage to day trade? Only if you're a stock trader, if you're trading securities. These are classified under the CFTC as commodity and forex swaps. You don't have to or need to put 25 grand in your account. Okay. Literally the minimum deposit is 100. When people are ready to go live, I usually tell them, 500 to, a few $1,000s so they can have good risk management as a percent of their account. But literally it's only $100 and you can actively day trade all you want because it's not a security like a stock. All right. And the rule applies to option trading on securities. It does not apply to option trading on Forex and futures. So it's a securities SEC rule, not a CFTC rule. So if you trade on the CFTC, you don't have that day trading 25K requirement. So here's an example. This is a really complex, intimidating looking screen. All it is to show you what I just said about how they're wider. Okay. What they're going to do is they're going to have like a daily big spread. Okay. So this what's called a master spread. All right. Those are like 2,700 to 3,300. It's like 600 pips wide. They set it at 6 o'clock. Okay. So wherever the market is at 6, boom, they set that big spread. And then we come around and they have some 8-hour spreads. Okay. So this one's like a 23-hour spread. So right before this spread's about to start, they set the 3 8-hour spreads. Like they'll set them at 8 a.m. usually. It depends upon the market. But let's say they set this one right here. And let's say they're 250 pips wide. So they'd have one that goes up 250 pips, one that's going down 250 pips, and one that is straddling the market. Okay, 125 up and down. See that right there? So floor to ceiling, and then floor to ceiling. I'm not sure if you're able to, follow along, but just the blue boxes right there. Let's see here. Let's see if this works. So we got floor to ceiling, floor to ceiling right there. And there's another floor to ceiling right here. Okay. So the market was here. And what they did is they just set one 250 pips up, 250 pips down, and one that was, like I said, straddling the market by 250 pips. That's an 8-hour spread. Okay. They also had 2-hour spreads that were only 100 pips wide. They said, well, there was 100 pips up, floor, right there. See that? The ceiling. And then floor, the ceiling. So 100 pips up, 100 pips down, then 100 pips straddling the market above 50 and below 50. So at 6 p.m. they set the daily spreads, okay? But they also have spreads that start. They have spreads that start literally every hour, that are 2 hours long, and they also have other like longer term, like 8-hour and 7-hour spreads. So Eastern time. So everything's based on Eastern. Every quote you see on Nadex is Eastern time. So now the cool thing is you don't have to keep track of all this. If you'll use the free scanner, it automatically updates all the spreads live right in front of you. It has all that stuff. You don't have to memorize any of this. I'm just trying to help people who are going, where do the floor and ceilings come from? They're always the same width. They always start at the same time. Beyond that, it doesn't you don't have to know them all. I mean, I know them all just because I've traded it for, years, but it's not something that helps make me more money. I just see what's available for the trade I want to do right now, and I take it. Okay? So don't let that, overcomplicate things. So the basics of spreads are really easy to understand. I mean, that you got the floor, you got the ceiling, you buy or you sell, you have capture risk, you have capture reward, $1 per tick. Hopefully you got that. If you don't, we have a whole series on the basics of spreads. Over in our forum, it is free. Just search basics of spreads, or my favorite one is ins and outs of spreads. Ins and out, literally if you type in and outs of Nadex spreads, and Nadex spreads A to Z. So if you want to find those two forum posts, John, so ins and outs of Nadex spreads and spreads A to Z. They have a lot more additional training on spreads. Okay. Now let's look at how I trade. Whether you're a futures trader, forex trader, stock trader, CFD trader, or a Nadex spread trader, this would apply. Could you do it on binaries? I have people that do. I don't use this system specifically on binaries. I trade it on spreads. First question I always get is, what are IZONES? IZONES are institutional zones. Okay? And they autoplot on the chart, and they're basically where there is strong support and resistance in the markets based on order flow. They autoplot on your chart. Okay? And I throw a bunch of indicators on top that feel really intimidating. But when you look at it, you back up and you're like, oh, it's just all green or red. Okay? So we have trend bands. That's this band you see in here. You've heard of Bollinger Bands. These are trend bands. Okay? We have what's called MVP triangles. I use these for trailing stops. And I have a couple other lines. I have one called trend flip and trend catcher. Okay? And that's these, little stair step lines. And I have what's called bar trend chop filter. That's what colors the bar. You'll notice there'll be up closed bars with red on them, down closed bars with, green on them. It says, hey, this is the trend we're in. All I'm looking for is that all these colors line up. Okay, red, 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 sell. Green, 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 buy. Okay, so pretty simple. And it gives me a lot of confirmation. So a long entry. So we got, little green trend catcher arrows here with all the little lines are green, and we have the green confirm. When that goes green off of a green IZONE, remember that pink and green before I showed you? A couple slides back right here, these IZONES. Okay. When all my stuff goes green, I buy. Real simple. Okay, green, green, boom, buy. 2 ticks above. I set a trailing stop at these little predictor arrow lines. So I stop at the bottom here, and then when this predictor line shows up, I trail my stop literally until it is eventually hit, and then I get out of the trade. Okay? So that's it. All right, very simple long trend entry rule. Okay? What about shorts? Okay, so again, entering off the I zones, everything green, trail with the predictor or the trend flip line. Like, is that a hard system to learn? I'm, it almost seems funny to ask it, but is that a hard system to learn right there? Green, 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 buy. See, here we got greens, but not everything's green. So we're not buying with these little green arrows. All right. Easy. Short entries. Bounces off the red I zone. We got red trend catcher, red trend flip, red everything. Everything's red. We sell. What do? We trail with those predictor arrows. We get out of the trade. That's it. That is our trending entries. Okay? It's very, very, very simple. We use a unique bar type called continuum bars. They actually measure time and space. So we enter off the I zones when all the indicators are red. We trail with the predictor or the trend flip. I usually use the predictor. And how long does that take to learn? Okay. Can they be set and forget? Well, I mean, you can put them on, but you're going to want to trail your stop because you don't know when the market's going to reverse. So it's not like you're sitting here having to take a lot of Tums interpreting charts. I mean, it's like, okay, arrow moved, trail it, trail it, trail it, trail it. So you are actually manually entering the trade. So again, very, very easy to follow along on the trade. So that's it. Like training done. Okay, I mean that's how simple that is. Now some people go, what about chop? That's great for trades, but what about chop? Okay. Well, it's pretty simple. Usually grab like 10 ticks. When I see 2 I zones together, and we have something called ICE. You've heard of market profile. It's basically market profile on steroids. And that's that big red line. Or a deviation level, which is just based on how far the market should move in a given day. If I see these I zones form on both sides of one of these lines, that auto plot on your chart, then I'm just going to scalp between them. So I get a sell. I'm going to go down. I'm going to take profit when it hits the zone. Right? Buy. Okay, when I get the little green arrow, take profit the second that tick hits the zone. Sell, take profit when it hits the zone. Buy, take profit when it hits the zone. Sell, take profit when it hits the zone. Okay, buy. This one's oscillating. We got a new zone. Okay, take profit. That's it. So, and what will happen on these, what you'll notice, is that the colors will often be opposite. Notice how like our green arrow is on a red bar. Our red arrow is on a green bar. Okay, down here, our green arrow is on a red bar. So the arrows will often be the opposite color of the bar. And it'll always be when there's 2 I zones close together wrapping around a line. So when chop happens, I'm trading chop. But when trends happen, well, it's, people go, how do you know the difference? Because everything's lining up. Everything's red, everything's green. Okay, on trending entries. We don't have 2 zones really close together. Here, things are not lining up perfectly. We're just literally trading between the zones. Okay. The platform's ran on NinjaTrader, which you can get it free. You can also get the futures and forex data feeds free. If you go to our website and you log in as a member, the 3rd link under education in the top menu, and the 3rd link under education in the top menu will show you exactly how to set up Ninja for free. Okay. Let's see here. So that's the summary on that. Here's an example of, taking along, everything's green. We buy, we're trailing, 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 trailing. I'm up about $600. Actually did 2 different contracts on this one. I'm up $600. I'm using the scanner, by the way, to find my trades really easily. This is, a recent trade. Let's see here. Here's a short trade. Went short 21 contracts. Okay. When did I do it? Well, I did it when everything was red. Went short and then trailed down. and made a little over $600 on that trade. So just, simple trades. I mean, repeating it over and over. Here's some more short contracts. So I actually made 1,600 before that trade was over, throwing it all the way down, and that trade worked out very well. Do I make money trading? Yeah. I mean, there's a $1,500 withdrawal. I also have bigger ones. I tell people anytime you want to brag about profit, you should take out your profit for the day. Okay, whatever you made. Let's see here. And I tell people, every week you should take out half of your profit. You are trading you're getting paid to trade. That is your goal. That's why you're here. You're not here to grow your broker account. So yes, you want it larger so you can trade larger size, but always be taking out profits. Take out at least half of your profits every week. And you'll be amazed what it does for your discipline, your confidence. It helps you not hop from one thing to the next to the next. And so I recommend every week you take out profits, at least half your profits. Okay. Let's see here. You could use this on spreads. If you trade futures or forex or see if these are stocks, you can also use it on that. But I like it on spreads just because of the low defined risk. Again, I use daily near the market spreads. Okay, it gives me more time to be right, close to mirror the market, really easy. It's very simple. I use Apex Spread Scanner to find the best spread. Again, I'm going to do a whole training on the scanner tomorrow on how to use that to trades for IZONE Sharpshooter. So I think John actually put that link in there. It's also, if you just click on the big webinar icon on the right side of our page when you log in, the free member area, you'll see the webinar for tomorrow. You can register for that. And it'll show you all the spreads. It'll show you how close or far away that spread is. Okay? Like this spread right there, 5 ticks away from the market. So that'd be the spread I would, instantly go, hey, that's probably the spread I'm going to trade when I do this contract because it's really close to where the market is. There's another one. It's only 5 ticks away. So I got, plus or minus 5 ticks right there on that contract. And that's a lot of information to soak in really quickly. So just understand, again, I'm going to go into that in more detail tomorrow. Okay? Again, I use near the market spreads, close proximity. What is proximity? It's the difference where the spread is trading and where the bidder offer is of that underlying market. Okay? And let's see, how to make spreads easy. So it's easy to use. There's 3 ways to enter those orders. There's 3 ways to exit orders on the scanner. And I don't have a lot of time to go into that today, but again, I'm going to go into that tomorrow, okay? And in detail of what I do and how I use the scanner along with IZONE Sharpshooter to help me easily, and this is the big key, easily find the best spread, okay? And there's ways to enter the trade. We have stop triggers, so you can enter when the market hits a price, or you can use this as a stop loss or take profit. We have instant submits, so you don't have to go through fill out a bunch of stuff to submit an order. You can just hit a key and boom, it's lightning fast orders. Okay, so I'll show you how to use that tomorrow. One thing is just hop on our website, apexinvesting.com. Tell us you heard about us from Trading Pub, and it's a free basic membership. Hundreds of hours of education. Webinars are all free. Step-by-step training courses like IZONE Sharpshooter free. It's a free news trading plan and free deviation levels for NinjaTrader. Okay, and sign up for that. I know that was a really fast recording, so appreciate y'all's patience on that. I know it's being recorded, so we'll get that out to you. But best thing you can do is hop on that webinar with us tomorrow, and we'll walk through it a little slower for you. And I hope y'all have a day. I'm about to hop on a radio show. So I do a radio show every Wednesday and Thursday. So I use NinjaTrader to chart. Yeah, that's right. Thank you, Cam. Yeah, go ahead, Cam.
Well, Darrell, thank you so much for that great presentation. And in fact, while you were doing that, I decided to put on a spread, and I'll share my screen here really quickly and show how that's playing out. So just to show you how spreads can work, that was a great presentation, and I'll just show you a quick one that I took while Darrell was doing his presentation. What I have is I picked up a reversal on the ES market. Here's my little drawing tool. And right there is where I made the decision on this reversal here to do a buy. This horizontal line represents the strike price on the spread, which is a daily spread from 1960 to 2000. The maximum risk on that spread was $139. So that's the maximum I could lose. The this spread is $261, and the spread is currently up $180. So if I wanted to just take a quick profit on that spread, I could do that right now, which I just might do. It gives 190. So I'm just going to click on that open position, place that order, and I'm out with $190 profit. So I hope this was informative to everybody. And did you learn something today? Type in yes or no, or yeah, John, it was $190 actually in about the last 10 minutes. Yeah, that was fun. I was just, while Darrell was presenting, I decided just to snoop around, and that was, oh, Jonathan asked how many contracts. That was 5 contracts. So if I had traded just one contract, I would have been up 38. There we have it. I want to thank you so much. We are doing these live events once a month. So the next one is going to be on Friday, November 6th, and we're going to have Gail Mercer from Traders Help Desk, and she's actually going to trade the NFP news report live. So once again, I want to thank Darrell so much for being here. I know he had to run off onto another show. I think it was just a great informative presentation, and we look forward to seeing you the next time.